done that a couple of times, and that's how I got some of my positions in some of my deals.
Cool. No, that's great. That's a hack and a strategy that a lot of people don't know that's out there and available. But at the same time, it's relationships, because Ethan also has to know that the operator's legit. The operator's able to not only operate the property, but make it a success after purchase. Because if Ethan puts in $2 million, it needs that $2 million back 6 months later. You've got to make sure that you can deliver on Ethan. Welcome, Real Estate Hustlers podcast. I'm your host, Josh Appelman. Today we're joined with Ethan Geo. Ethan is a corporate real estate attorney, investor, and gap funder, helping deals close on time. A Cornell and Columbia law grad, he's invested across asset classes and lives in Houston with his wife and 5 kids. Ethan, we appreciate you coming on the show today. If you could let the listeners know a little bit more about yourself.
Yeah, absolutely. So it's a good summary. I worked in a large corporate law firm for many points in my career. I went as in-house counsel for a couple of years to a mutual fund and a hedge fund before I went back to a large law firm. And about 9 years ago, I was not particularly satisfied with my career track or the specific job. It was a lot of work, a lot of stress and pressure. So I was looking to find ways of having more income or being able to exit a high pressure work environment. And what that led me down was 2 paths. One was looking at franchises. All the ones I saw, I didn't really like. They all seemed like buying a job. And then real estate investing was the second one that I looked into. And specifically, I looked into hard money lending, where I could lend people money to fix and flip houses here in the Houston area. And I started doing quite a lot of that and earning interest income from doing so. And I kind of quit my corporate gig about 8 years ago and started practicing law by myself. I started I became a licensed life insurance salesman. So I sell life insurance to other clients and I invest in real estate.
Nice. So tell us your first deal. You decided to jump into getting into real estate. Of course, you had to learn before you just jump in. So tell us about your first deal, how that came about, then what led you to where you're at now.
Yeah, so my first real deal, I met somebody off of Bigger Pockets, which is a real estate forum that a lot of people, especially new people, post in. Met at a Starbucks, had a really good conversation with this particular guy. His name is Chris. And a few months later, he called me and said, "Hey, I've got this wholesale deal where I'm going to need to borrow your money for about a week to 2 weeks." It was just for him, he couldn't line up the wholesale properly in terms of timing. So he was buying a property and then he was going to sell it without doing any actual work to it for a higher spread. But his buyer needed time to close and his seller wouldn't give him extensions. So he just needed to own this property for 1 to 2 weeks while his buyer got their money sorted. So I said, okay, sounds great. So I essentially lent him money for that. It only ended up being a week. So that was a really cool, successful deal where I got paid back extremely fast. And I'm still friends with Chris to this day. We've done many deals. I've lent him money many times. We've also partnered on deals.
So it sounds like the deal that happens when you wish you could just hang your hat on that deal. And if that happens every day, every week, then you're fine. You're set.
I literally told him, I'm like, I just want to do these, but unfortunately they don't come up. So then I had to do a bunch of other different ones that were worse.
Yeah, gap funding and transactional funding. I mean, it's as vanilla as it can possibly get if you've got a pretty vetted operator too.
Yeah, and that's what we're looking for. We really like short term, basically no risk type of things.
Yeah.
So we're always looking for leads for that.
Well, put a plug in. What kind of, because there is a need for it with some wholesalers out there that want to double close and don't want what they're making on the HUD. So who are you? What is your avatar? What are you looking for?
That's exactly what I'm looking for. I'm looking for people that essentially are doing that, or sometimes it's a deficiency, it's a short sale, a deficiency, or a HUD loan where an assignment is not permissible. So it has to be a double close. So if there's a situation where someone has to borrow money for a very short period of time to get to the next step. So in that case, if it's a HUD foreclosure, they have to own it for that 1 second and then they can sell it to their end buyer for a profit. I'd be happy to look at all of those situations. We've done quite a few. I have a pretty flexible schedule in my day, which is one of the reasons we're recording this. And I move extremely quickly, so we can do these in very short order.
Um, we should back up because for those that are going to listen, what would be the purpose of this? Like a transactional fund or a gap funder? What would be the purpose?
Yeah. So to back up, so there's situations in transactions. So let's back up even more. A typical wholesale deal would be, Josh buys a house from Ethan for 100K because Ethan got himself in some trouble and just needs cash now. But the house is actually worth 150K, and Josh is gonna go find a buyer to buy it for 150K. So Josh is gonna make 50 grand just because he's really good looking. That's basically it. That's the value he added. Connecting two dots. And so in situations like that, Josh is not going to want Ethan to know that he's selling it for 150K. And Josh is also not really going to want the buyer to know that he bought it from Ethan for 100K, because both of them will be asking Josh for a discount at that point and saying, "Hey, Josh, we can't just pay you 50,000 just because you're good looking. That's just way too good of a deal for you." So, blah blah blah. So in situations like that, Josh can say, "Hey, look, I don't want any of these people to know any of that. So the only way to do that is to double close, i.e., Josh has to own the property for 1 second, and then he's going to sell it to the end buyer. So Josh will borrow 100K from somebody for 1 second, and then sell it for 150K and make his 50K, and neither Ethan nor the end buyer will have known that Josh just made 50 grand.
Yeah, yeah, and that way you don't get beat up on a last minute um, uh, retrade. We'll call it that way. You can make
Yeah,
what
or
you want to
just
make, and
yeah, or just the BS that comes with it.
yeah,
The seller's gonna say, "Oh, you took advantage of me." Or the buyer's gonna say, "Hey, you're making too much of a margin." And there's other situations that's not the only situation. There's other situations like if it's I think a HUD foreclosure or a HUD sale, they don't allow the assignments, so you have to double close. You have to buy it for 1 second.
yeah, very cool. Back on multifamily. So your bio says over 1,000 units. Is that correct?
Yeah, I'm a general partner on many different deals across the country.
Cool. Tell us about that. Tell us how you started to get into the general, because general partnership is totally different than just going out and buying multifamily. You got to get in different rooms, build trust with people, bring value to the groups. Tell us about your journey into getting into multifamily syndication and being a part of a GP.
Yeah, so I started doing that about 4 years ago. I haven't been super active recently. There's not been a lot of deal flow. Um, so I started I signed on a loan for a friend here in Houston. She needed a loan guarantor for a deal she had, and then some other folks found me, and that's one of the ways that I was able to get into some of the deals. Is if the team didn't have enough net worth or liquidity collectively themselves, they would have to bring on another person to help them satisfy the bank requirements. And then some of the positions I got were for situations where someone had an investor back out on them last minute. So let's say somebody has a large $2 million investor a week before closing say, "Hey, Josh, this deal looks great. I love you, but I'm getting divorced and I can't put in 2 million. I'm really sorry." And what's Josh going to do? You can't force him to send in money. So at that point, Josh is going to have to run around and scramble and try to find $2 million. Maybe contact 40 people, maybe 20 of them will give him 100K. But that's too much work within a week. And let's say there's hard earnest money at risk, there's reputational damage that comes from not being able to close. Situations like that, Josh may just be willing to pay a big premium for someone to come in, lend him $2 million, take care of the immediate problem, and then give Josh 3, 4, 5, 6 months post closing to then go find the right 20 people to uh, invest 100K in the deal.
Yeah.
So I've done that a couple of times, and that's how I got some of my positions in some of my deals.
Cool. No, that's great. That's a hack and a strategy that a lot of people don't know that's out there and available. But at the same time, it's relationships because Ethan also has to know that the operator's legit. The operator's able to not only operate the property, but make it a success after purchase. Because if Ethan puts in 2 million, it needs that 2 million back 6 months later. You've got to make sure that you can deliver on Ethan. So it's that's getting in different rooms, building relationships, and then you find Ethan in those rooms, and it works out. Tell us about some learning lessons that you've had along the ways, because there's always the I wish I knew this before I did that type of deal.
Yeah, so I think before you do business with anybody, I would strongly recommend you do some sort of background check on them, cross reference as many people as you possibly can. I think the most disappointing thing that I learned over the past few years is um, I think in life there's a lot more scams and things that are going on than appear on the surface. And when things get rough, like commercial real estate has just been kicked in the face for the past 3 years with interest rates going up. That's when a lot of schemes rise to the forefront, and people that were really just mostly writing schemes the whole time, that's when they get discovered. So there were multiple people that I was in the process of doing business with that had decent reputations, but then as the tsunami hit them, it was revealed that they were actually running some sort of scheme. So you just always have to be really, really careful with who you're dealing with. And I do think a lot of people start out fine, and then they go down that what's it called, the slippery slope to hell, or the road to hell is paved with good intentions, and they try to solve a small problem, and then they create a bigger problem, and then at a certain point they just end up having to go to jail.
It snowballs, yeah.
Snowballs immediately, like so quickly, and they didn't start out by intending to defraud anybody, but the end result is the same.
Yeah, that's why building it slow and steady and consistent. A lot of guys just went out and wanted 2,000 units every night, and never operated or owned their own business to begin with. So you're not only, you have a ton to manage, a ton of infrastructure, you don't have any experience to go along with it. And plus they'll put mezz debt in there to bridge the gap on top of a bridge loan, and then investor capital. And before you know it, you've got a cabalated, just big ball of goop.
Yeah, you're at 150% loan to value.
Yeah.
Not everybody's gonna get paid.
Yeah. And you bought it on performa.
Yeah.
Yeah, that is great, great advice. Vet your operator, make sure that there's a track record there, make sure that they can deliver and do what they say they can do, be who they say they are. Tell us about a deal that has went sideways, and that a learning lesson. Tell us some good stuff, some juicy stuff.
That's too hard to do on a format like this, but I mean, I can probably tell you, almost everybody that bought something in 2022 to 2023 definitely has a dog on their hands. Uh, maybe they bought it okay at the time, but I mean, values are basically down 10 to 40% depending on the situation. So there's lots of deals in the marketplace that are calling capital to try to get an extension on their short-term debt. There's lots of refinancing opportunities that require more equity to be brought in the table. Sometimes that comes in the form of a preferred. I mean, there's just all kinds of things going on in the marketplace. It's been a bit of a rough patch for commercial real estate the past couple of years.
Yeah, and the 10-year Treasury, it's there's not really any relief. You'll see it go just bouncing between 4.25 and 4.5, and makes it tough for anything to really pencil. Well, anything to make sense. I mean, if you're buying, if it's a new acquisition, you can make that happen. You can make it work. But if your performa, your reversion cap rate was a 4.5, and you can't refinance out of let's call it a 6.5, Freddie, small balance or something, it just doesn't work. It doesn't make sense.
No, it doesn't. So kicking the can down the road in most of those situations is the most logical one. Doing a small to medium capital call and then just seeing what the next 2 years will show. That's usually a pretty reasonable, logical choice.
Yeah, you said it there. You're not seeing any deal flow. Are you looking? Are you still out there looking on the horizon, or what's keeping your time going right now?
Yeah, so deal flow is definitely slower than before, and then the deal flow is also, I think, of worse quality. So a lot of I haven't quite seen blood in the streets. I don't know if you've seen the same yet. I feel like sellers are still not quite, just discounting things 50%, for example. So I haven't seen that, and I don't know if that'll necessarily come because a lot of people are doing these small to medium capital calls or doing some sort of deferral with their lenders to to defer things and just see if the next couple of years will be better type of situation.
Yeah. I
So I spend
think
a lot of my time doing legal work for clients, title and escrow work. Yeah, my law firm does PPMs. We form entities. We do operating agreements and the like. Sorry, Josh, you were saying?
Well, no, I was just going to mention that I'm sure that there's been rescue deals that to where it's been a pocket deal, selling from one firm to the other, but nothing. I haven't seen anything major come to surface like this is a like you had mentioned 50% off of ARV or whatever it may be.
Yeah,
Um,
I haven't seen that. I've just seen, and like you said, right? It's who you know. So maybe there have been things. I saw one in Texas a year ago where the lender foreclosed on a portfolio and then they sold it right after foreclosure to somebody that they knew and they financed them. But unless that was like a $200 million deal, so I would have no access to that. Most people wouldn't have any ability to get into the room or convince anybody to do that for them.
yeah, I know there's a lot of capital looking for a place to call home for sure on the sidelines, just waiting for things to change. And I don't know I really don't know what's going to change uh, immediately for anything. Um, I just say I think that there's going to be more turbulence in the short term um, to get things kind of just stabilized and get some things reset.
I don't know, like people. So I also lived through 2008 as an adult. People always say there's this, tsunami of money on the sidelines. I don't know how true that really is. I don't know if there's like really good data that's accurate. Feels like everybody and their mom is in stock market and crypto.
I
I'm
get
not sure if
calls
there's a
from
marginal dollar out there.
pref equity is out there
Okay,
just
that's out there.
I mean,
Shark
I'm
money.
getting calls. Well, yeah, they want to position it and they want to plant the cash, but and that's not necessarily cash that we even want on our table. But I'm just getting calls like, Josh, got any deals, and that's not what I'm not looking for that kind of cash to bring in because that's where it's things can go. You need partners. You need true partners willing to to go with the ups and downs of the boat. Um, Not just if things go bad, then it's ours. So,
Right.
but that's where you got to vet your partners too and make sure that they are everything's in alignment and your expectations are on the line. Everyone's in it to win it because there are firms out there that look for you to fail and to add your property to their portfolio too.
Yeah,
So,
that's I've heard of that. I don't know if it's a majority, but there's definitely a minority. There's definitely a statistically significant portion of those type of funds that are set up to just take it over.
oh yeah, yeah. They'll start with an interest rate, and then 6 months down the road, there's going to be a tag on interest rate that's just kicking off and compounding every month, every month, every month. And those are the sharks of the industry. They
Yeah,
give they make you fear for who the other guy is.
yeah,
And you had mentioned that before too. With there are scams in commercial real estate because it's almost the wild west. You have to do your due diligence. You have to make sure that you're getting cash in accrual books. You got to check on your utilities. You have to call a utility company, make sure there's no underground leaks going on, make sure the water bills are consistent. Just you've got to do your homework on the property because there are a lot of things that the seller knows that you don't know, and that you will find out if you close. But it's being positioned and prepared and well equipped to be able to take on those challenges too if it happens.
absolutely. Yeah, it's a real business. I mean, there's stuff to do.
Yeah. So tell us some successes that you've had, and that way the listeners can know what the bright side of things.
Yeah, well, I mean, I've been fortunate in most of my dealings. There's been really highly honorable people that I've done a lot of work with, and they've done exactly what they said they were going to do, and they said exactly what they were going to do. So it was very consistent and very easy to deal with them. Plenty of disappointments along the way too, where people just can't get their stuff together or just start switching things last minute, or who knows, maybe it was they already always intended to not honor things. But yeah, there's a definitely there's a group of really solid people in the real estate industry that um, just at its core are really good to do business with. So I would just encourage people to continuously do business with those folks. Don't get distracted by the person that's going to pay you 1% more over there. I don't think that's usually worth it. It's usually worth it to go with somebody tried and true that you've already had experience with.
Yeah, yeah. Try to save money in the wrong places, and then it
Yeah, or
costs
to
you a
try
lot
to
more
make an
money.
extra buck. I mean, a lot of people make. I mean, I've been guilty of this too. Try to make a few more bucks and then shoot, like that didn't work at all. Because I thought I was really good at making red bottles, therefore it should be easy for me to make green bottles. Not necessarily translates that way. I might actually end up being terrible at making green bottles. Or hey, green bottles are paying a penny more. Let's go load up on them, and nobody wants green bottles.
Yeah, yeah. No, that's for sure. That's where wisdom kicks in with experience, so you
Yep.
know what to stay away from. Cool. What are some books that listeners could pick up from your suggestion?
Oh, I don't I read a ton of articles online. I think I'm part of that generation that doesn't read a lot of books anymore, and I usually listen to podcasts and presentations more so than audiobooks. But when I travel on airplanes and stuff, I do read some books. There was one recently. Um, I think Tony Robbins wrote it. I can't remember exactly what the name was, but it was a really good one where it detailed the stories of people that were successes and kind of what was the one or two trigger things that they did that resulted in them being very, very successful. A lot of people in my networks also like this book called Die with Zero by Bill Perkins, where it's about kind of reframing spending as much of your money earlier on where it makes more impact and things like that. A lot of people have liked that book. I haven't actually, I think I read it. It didn't quite resonate with me the same way, but a lot of people have really enjoyed that book.
Cool. Awesome. All right. Very good. If somebody's just now getting started in real estate and trying to find their path, how would you suggest they move forward and go about it?
They should definitely find groups of people and mentors, whether informal mentors. If you want to pay for a mentorship, go ahead, as long as you're comfortable with the mentor. But there's all kinds of ways to get mentors and get wisdom from other people around you without you necessarily having to pay for it. I
Yeah.
think that's great. Just learn from the experience of others, get a lot of stories, and really think about them and synthesize them together.
Yep. Totally agree. Cool. Ethan, if somebody wants to reach out to you, see what you're doing, see what you're investing in, how can they get a hold of you?
Yeah, LinkedIn is the easiest. If you search Ethan Gal Houston or Ethan Gal Cornell or Ethan Gal Columbia, I'm probably the first one. I respond to all my messages, emails, phone calls, etc. I've just been trained to be that way since I had my first job uh, about 19 years ago. So feel free to reach out. LinkedIn's probably the easiest way to connect with me.
Cool. Ethan, definitely appreciate your time. Look forward to following you. Thank you.
Thank you.